used to think that I only wore this during big down days. No, I wear it if I'm feeling really, really good about the market, and that's definitely going on today. So I thought I'd dress up for you. If you're thinking, what a weirdo. Hey, count your blessings. I used to dress up as Janet Yellen. So anyway, it's a terrific day. On Friday, as I mentioned, I think the selling was just about done. And what I was looking for was a rally, a nice fat rally, so I could get in at better prices. So I raised cash, bought Boyle, and I bought SOXL as a hedge. Boyle didn't work out, but the loss was small. It's like $1,000 down the toilet. Oh well, tried. SOXL made up for it. That definitely worked out, but I'm out of it. I'm pure bear again. In fact, I'm so pure that I took all that cash laying around about 2 hours ago and started gobbling up puts again. Can't help myself. So short I could jump off a nickel, and we'll see if this is the end of the bounce or not. It was a pretty big one. We went up a lot, hundreds of points on the NQ, and the ES was up strongly, but we really pushed up toward very close to what I consider important levels of resistance. The next 2 weeks are going to be huge. We've got the debate tomorrow night, which may or may not inform the market's direction. We'll see. Wednesday, we have the CPI, which definitely will have an effect. And the next Wednesday, Jerome Powell and his minions will announce whether it's a 25 basis point cut or a 50 basis point cut. It'll be one of the other. Either that might mark some kind of bottom if we just fall and fall and fall until then, or it might mark the inflection point for when we can really get serious on the bear side. So this is going to be a very exciting 2 weeks. Absolutely. As I've been mentioned, I've gotten very conservative time-wise. I don't have a single investment that expires earlier than the second half of January 2025, and I've got a goodly amount way out beyond that. So the next 2 weeks per se don't matter that much, but I've got a lot of time fat around there. That's the point. They're doing well regardless. By their very nature, these are my very favorite charts. For those of you who are newer to me, I tend to lean bearish, to put it mildly. And so these are all, I consider these bearish positions. These, I own puts on them. I'm long puts on them, as I said, with at least 4 months left, and in most cases a lot more. And I'm looking for them to go down a lot. So let's jump in. Here is the spider, and it is up, which delights me. I've never been so happy to see green when I woke up. We pushed right up against what could be an important resistance level. That's a nice little rounded top there. We'll see if that puts an end to this bounce, but we definitely shook off the oversold nature that we were in on Friday. I was honestly so pleased to see the market just climb and climb and climb all Sunday night and all into Monday morning. That's exactly what I wanted to see. Here's the ES itself. We got deliciously close to this Fibonacci, and we've seen some push higher off of that. And of course, what we want to see this month, if you don't mind, will be a failure of that fib, so we can challenge the low seen on August 5th. EFA, as I mentioned on Friday, got out of this with good results, but I'm back in again. Why? Well, because it bounced. What was the amount that I was looking for? And I conflate this show and my own site. Sometimes I don't necessarily remember, like, where did I say this? I try to say the same things, but I might not have got the figure yet when you and I met on Friday. But the level I was looking for on a peak was 80.97, and we got up to 80.90. 7 pennies. 7 pennies. I'll take it. That's close enough for government work. So I'm back in EFA in a big way. The only twist is that what I sold last Friday was November puts, and what I bought today was January puts. Because again, just to be clear, it's not because I really intend to hold on to these things until January 2026 or whatever the expiration may be. It's just because I like to be conservative. I don't like a lot of theta burn going on and so forth. I want the meat of the move to be just direction, and I want to give it lots of time. If the EFA plunges, I will happily get rid of this a week from now or something if it gets far enough down. So I just want to be very clear on that. Some of the business I've got will take a long time, I think, to play out, months maybe. So that's why I really want to give myself that opportunity. As I said, really my only hedges were Boyle, which was a loss, and then SOXL. I got out of this earlier today at, I think, 27.23, I think, made about probably about 5 or 6% profit. It was a pretty big position because I was trying to tamp down any damage to the puts, which really wasn't a problem. Good. I'm out of that. And as I said, no long positions anymore, in cash, much lighter. And in each case, I'll kind of mouse over present stop loss level. Not because, you should ape what I'm doing at all. I just want to be clear, like, what for me is a level that I would just scurry right out. And they tend to be really conservative, to be honest. In fact, that's probably too conservative, but we'll just leave it there. Friday's high. ARM Holdings, ARM, price gap right there. And that's my only semiconductor position. Cleveland Cliffs, always a favorite, and we are just sinking lower. which is very cool. Let's change this to a candlestick so we can see a little bit more plainly. This remains a real favorite of mine, but you can see there's red, 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 red. You don't see that very often, but I welcome it. Here's Coinbase, which is up pretty strong today, and therefore I've not amped up that position any because it didn't really get high enough for me to think it was, cheap. So I'm just hanging on the existing position for coin. I got into this fine. I've been bellyaching enough about this because I felt I kind of missed the boat on Dell. Today's bounce allowed the boat to come back, so I am finally taking advantage of this right triangle pattern, which I perceive as the important resistance to this. Another one I was bellyaching about, missing the boat, but got back into instead of complaining about it, is Alphabet, GOOGL. And as you can see, ever since this day here, the 20th of August, it's just been like so. And that's the sound it's making. You can see just big old fat bars there. We've gone from 168 down to, we've lost over $20 on this, withering away. Huntsman, and this is a great example of something I want to give a ton of time to. This is January 2026 puts, because if it takes a year for this thing to express itself fully, fine, I will happily wait a year, because as you can see, these moves can take a while before they bottom out. This is the biggest top this has ever had, and so yeah, I'm going to give this tons and tons of time. Here's a new one. I don't know if you've ever talked about 3M before. I stumbled upon this weekend. I spend 5 days a week with you looking at charts. What do I do on my weekends? I look at charts. I have no life. I enjoy my lack of life. I really do. This is the trend line, goes all the way back to 2018. It's just been banging out a series of lower highs. And when I saw 3M, I mean, what do you think? Scotch tape, Post-it notes, glue. I thought the PE would be like 3 or something. No, it's 75. Paying 75 years of earnings to get into 3M. Okay, I thought that was like biotech level of PE, but they have a PE of 75. Kind of shocking. So that's all. You got to buy a lot of Scotch tape to earn that PE. Netflix. I'm into this one, and there's the stop right up there, which is, I guess that'd be Thursday's peak. Shopify, again, slipping nicely lower, having been repelled by that broken trend line. That deserves a red. Let's make that trend line red, because that's strong resistance right there. Schlumberger, now here's my favorite, CC. Chemours, I guess it's called. This continues to slip lower. Love that one. Here is Canadian National Railway, which had a nice slip on Friday, and it's undone that. And this meant to adjust and did not. In fact, this is such a long-term one to give this a lot of wiggle room. But that's CNI right there. I'm back into Goldman, GS, and the stop on this one's right up here, which is peak from last week. Vail Resorts, MTN, like as in mountain. Another right triangle top on this one. The base of that right triangle, which is also the stop loss. Royal Caribbean, RCL, here's the stop on this one. I've looked at this one for years, and I've never bothered pulling the trigger, but you know what? After this massive recovery, I figured now is the time. This is another long-term one, but yeah, this is semiconductor. I correct myself. This is semiconductor related, so I guess we can add that to the ARM list as far as semiconductor stocks. But yeah, this is a new put for me here. And here's another new one. A lot of new faces here today. Wingstop, like so. And speaking of PEs, this has a PE, and when I checked, I think of 112, which makes 3M look like a bargain. But yeah, they sell flavored chicken wings, and 112 PE on that one. So that concludes our list of short positions. Just to kind of cap it off, the tripod I'm talking about here is like bearish equities, bullish bonds, bullish precious metals, parentheses gold. With that in mind, here's the long-term continuous contract of the NQ, NASDAQ. We have quite clearly broken the channel twice. We broke it during that brief failure back on August 5th. And we spent the entire month of August bouncing higher, which was just a massive bull trap, because they got suckered in and suckered in and suckered in. And then there was no announcement made, but on the 22nd, that was the peak, and it's just been crumbling down ever since. So we have clearly broken the channel utterly. It's been broken twice. This was not an anomaly. We're back below it where it belongs. So that's bearish equities. The bullish bonds. Here's the ZB. It has been engaged in a series of higher lows and higher highs, the very definition of an uptrend, and we are pushing above this beautiful base down here. Because as I said, I fully expect interest rates to be slashed like crazy for many, many months to come. And bonds are aligning nicely with that notion. And then gold, which of course has been terrific. Here's the base on this one, cup with handle, and whoosh, up it goes. 2,600 is next, and I fully expect 3,000 in the months to come. That's kind of the triumvirate right there: bearish equities, bullish bonds, and gold.